Welcome to the Market Rundown. This is Matt Bennett, grain marketing consultant with Channel, and I'm here today to talk about the August U.S. supply and demand report. So August report typically is one of those where in the past, USDA was actually been out in the field looking at corn. Now, over the last couple, 3 years, they are just relying on surveys and satellite imagery. So definitely an interesting report. Maybe not as much weight as what it's carried in the past, but surely a very interesting report. So my three takeaways, the first thing is corn yield went down, which was very interesting because with their demand adjustments, it really didn't change a whole lot whenever it gets right down to carry out levels. Soybean yield also went down, but soybean ending stocks went down quite a bit for new crop, which could be viewed as potentially a bullish factor. The third point, as usual, is how does this impact things, especially giving the timing of the report, giving the time of some of the rainfall that we've had recently, and how's this going to affect us moving forward. So in detail, as far as the corn report goes, 175.1 was the yield that the USDA printed, which is a pretty decent cut from last month's 177.5. You would think maybe that's a fairly bullish number, but at the same time, there's been a lot of question marks with demand this year. It's probably been the number one thing the trade has talked about, worried about export demand, for instance. And so the USDA did cut exports as far as new crop was concerned. And, whenever you get right down to it, the carryout dropped marginally around 50 million bushels, but nothing substantial. So in all honesty, it was a very muted reaction. Actually, corn traded, with double-digit gains for a couple of minutes, and then, it kind of subsided, and it was up marginally from that point forward. You looked at the soybean report, a little bit different situation. We were at 52 yield, and then USDA comes down to a 50.9. And so 50.9 isn't a major drop, 1.1 bushels, but it certainly is enough of a drop that whenever you factor in even some demand adjustments from the USDA, it took carryout down over 50 million bushels. So you're looking at a USDA report for soybeans, which I guess could be viewed as a little bit more of a friendly factor. But my third point is where you kind of tie it all together. So, what does this all mean? Well, the thing is that these USDA reports are typically supposed to be tabulated as of August 1st. So this was the state of affairs as of August 1st. And we know that the Corn Belt or Midwest had a very widespread rainfall over the last weekend. So, over the last week, we've had anywhere from an inch to 3 and 4 inches of rain in a pretty decent chunk of the Corn Belt. So, that's since August 1st. So, is the trade going to take a look at a report like this and potentially discount it due to the fact that the weather's been so solid since those numbers were tabulated? And I think based upon the reaction of the report, with both yields being kind of a friendly number, with both carryout levels actually moving lower, I've got to think that the trade is discounting it based upon recent weather. So overall, it's kind of a blasé report. It carried a little bit of enthusiasm due to, I would say, bullish yield numbers. But at the same time, the trade didn't really buy into it. So, once again, my three takeaways here that, corn yield was lower, but it really didn't impact a whole lot. Bean yields were lower, but you had a pretty nice little reduction as far as carryout was concerned. And then the third thing is that essentially we just didn't see much in the way of changes. The market didn't react the way that maybe we would have hoped to have seen, and overall for price direction, I think we're going to need more information before we can really get somewhere. So once again, this has been Matt Bennett with the Market Rundown with Channel. And I just want to encourage you, if you have comments or replies, to leave them at the bottom of this video or sign up for our newsletter. So thank you for joining us.